Hello, friends. Thanks so much for joining today. It's 11 o'clock my time. I'm on the west coast of the US. So I'm going to go ahead and get started. I saw in our chat we've got some folks that have been involved with seeds for a while. I know that I think Gil was first involved with seeds in like 2017, and some friends from TikToks. Hi, Jen. Julie is here as well from Hungary. I'm sorry. Yeah, from Hungary. And yeah, so here we go. I wanted this to be like kind of chill and informal. I'm kind of proud of myself because I ended up timing this well since Bitcoin literally just hit all-time highs like this morning. So I'm going to just talk about generally what I see this meaning and what it means in the context of what may happen in the cryptocurrency sector over the course of the next year or so. But then also, as many of y'all know, I'm really interested in the spiritual aspects of what's going on Earth right now. And I think, like that connects to an impending breakdown in the legacy financial system. And Seeds is really about helping us shift through that gap so that we're moving away from, like self-interested late stage capitalism, which has no space for giving. And we're shifting into something that's more decentralized and that's grounded in this idea of building abundance for everyone involved through helping others and through giving. Like that's what Seeds is about at its core. And in doing that, like I'm going to try to share the practical skills that I learned as a professional stock trader because those can apply today as we're going through this transition. All right, so if you don't know me, I think all of y'all are familiar with me. Hello, everybody. Willie's here. Hi, Willie. Hi, Brian. Aaron's here. Hi, Aaron. Nice to see you. Jen Wells is here too. Hi, Jen. Great. It's so great to see y'all. This is the first time I've done this on YouTube as well, so I'm a little nervous and hopefully I don't screw anything up too badly, but I appreciate y'all being here. Yeah, so I'm just going to speak. I don't have like slides or anything. And then I'm going to later hop into a graph of Bitcoin on Gemini Active Trader, a centralized trading platform. And I'll talk through how I'm approaching trades when I'm making cryptocurrency trades on decentralized platforms. I'm also going to, after like sort of talking through the climate and what I see happening now and into April, because a big event is happening in April, which many of y'all are aware of. The Bitcoin halving or halvening is expected to happen around like April 19th. It depends on when a specific block is mined. And what I find fascinating is that for my astrology heads, the Jupiter-Uranus conjunction in Taurus, which, is about essentially abundance and decentralized tech, and Taurus is about money and value. Like it's expected to happen at almost exactly the same time as the Bitcoin happening. So I just think that's really fascinating. It's a big deal in my view and in my experience, having been involved with cryptocurrency since 2013, that Bitcoin hit all-time highs this morning, even though the halvening is expected to be like 43 days in the future. In the past, when we've had halvenings, this is going to be the fourth halvening in total, that's sort of functioned as a catalyst for the market as a whole. So that's why even if you don't love Bitcoin, like I personally haven't traded Bitcoin in a number of years. Really, I think I made some like tiny trades occasionally, but I'm much more interested in other cryptocurrencies. But even if you're kind of in the same boat and Bitcoin doesn't really resonate with you, it's worth being aware of what's going on in Bitcoin and this like big events like the halvening in the Bitcoin sector, because Bitcoin is still like the best known, it's the most expensive, it's the pioneering cryptocurrency. It's been around for over 15 years now because it has such an influence on the cryptocurrency sector as a whole. And then in addition to that, in my opinion, the reason that we're already hitting all-time highs so far in advance of the halvening is because if you saw, it was like January 11th of this year in the US, something called a Bitcoin ETF or exchange traded fund, essentially a Bitcoin stock, started trading. So that meant that like people have known the word Bitcoin for a number of years now. I think I'd seen a study. This was actually in the last market cycle, I believe. It said that like 7 out of 8 Americans had at least heard the word Bitcoin and were familiar with the word Bitcoin. So as mainstream awareness has increased, like this is significant, the introduction of this Bitcoin ETF, because it then meant that mainstream investors who maybe felt intimidated by the idea of cryptocurrency or were more risk averse or thought it was, like going to be too difficult to set up a wallet and make a trade on a cryptocurrency exchange, now they can trade a version of Bitcoin in a way that they're comfortable with. So yeah, I'm very confident that that's a big part of why we're seeing this surge in the price like now, even though the halving is still like a month and a half away. So there's that. Jen's like, it doesn't seem like a coincidence regarding, the halving and the Jupiter Uranus conjunction. Yeah, totally. Absolutely. Um, so, so that's why Bitcoin is sort of a litmus test and it's worth paying attention to, even if it isn't a cryptocurrency that you're particularly interested in trading on like an individual level. Um, Claire says, button down my shirt. Why am I flashing y'all? I think it's okay. Okay, so what that may mean over the course of the next year or so is that, in my view, again, we've already hit all-time highs as of this morning. It doesn't look like it's really backing off. There was something of a pullback, which I'll show you when we look at the graph here, but it still looks quite strong. In the past, when we've had these Bitcoin halving events, it's often been roughly like 8 to 9 months after the actual halving before we hit all-time highs. So that's another reason this is a big deal. So things just look quite strong to me. And in addition to that, like with what the astrology is showing us in terms of things heading toward true decentralization. So good quality cryptocurrency projects that are actually using decentralized tools in innovative ways. I think we're going to keep heading in that way. It's been frustrating for me and funny in a way, but just also annoying in that if any of y'all watch Pam Gregory on YouTube, the astrologer, I watch her pretty religiously. And with the crash that we saw in 2022, late 2022, which was like largely attributed to FTX and Sam Bankman-Fried's fraudulent behavior, it was interesting because that fall happened so quickly. Like I remember in like April seeing like Vogue ads with like Giselle like promoting FTX, and he was viewed as this like genius billionaire, like so many male people in the sector who aren't actually geniuses can tend to be viewed. And then the fall happened pretty quickly. Where am I going with this? But the thing about that, and Pam Gregory even said this in one of her videos, and I like commented to try and correct this idea. It was this thought that there was like a backlash against decentralization happening, even though the larger energies are trending toward decentralization. But what I didn't see any astrologer or spiritual person talking about, and certainly the mainstream media wasn't speaking about this either in anything I'd read, was that was actually centralized failure. When FTX failed, when any of the scamming projects that you heard about, the large scale ones failed. So like BlockFi was another one. What were the more recent ones? I mean, Mt. Gox was one back in the day. Celsius was another one. Voyager was another one. Those were all centralized projects. They lived within the cryptocurrency world. So for those who were less experienced in the world of cryptocurrency, there was this belief maybe that they were decentralized, or maybe it was folks that weren't even aware that that was a thing in the world of crypto. But it wasn't the fault of decentralization that those things happened. Those failures happened for the same reason that bad banks have failed for hundreds of years, with the exception of the fact that the FDIC in the States, the insuring organization, wasn't backing up those cryptocurrency exchanges. So it wasn't actually like a backlash against decentralization in the energy. It was more centralized failure. And I think we're going to keep seeing that over the next year and onward, because, again, the energies are pointing toward decentralization. And I think, things are happening as well in regard to like this idea of finally this rise in healthy feminine energy coming up on Earth so that things can kind of get back in balance in a way that they haven't been, I think, in millennia. And I think that, I mean, it's tricky to say because I'm biased because Seeds is our project, but like Seeds exists because I think we're on trend with that. It's about imbuing feminine energy and giving and also practical structure that works in a tangible, technical way, bringing those things together in the ecosystem of seeds, because I think that's where we're heading energetically in the not so distant future. So yeah, I think this should be an interesting time. It's, I mean, it's sort of like what's the word I'm looking for? I think we're at a certain precipice. And today, I think maybe even is a significant day because we've already hit all-time highs in Bitcoin. So yeah, I really want to do my best as ever, but it's been hard to get through the noise in the last 2 years. It's been actually really frustrating for seeds because even using the word cryptocurrency, like I considered not even using that word for a while because the people that would most resonate with seeds, the artists and the spiritual people, um, activists, people with a lot of healthy feminine energy, they were so turned off if you even mentioned the word cryptocurrency. Even like yesterday, like last night, I like posted a short on YouTube because I'm doing that more now. And I just mentioned that Bitcoin had hit all-time highs and it had like 80% dislikes. Like just the mention of the word is still so off-putting, and it's frustrating because it's because of the poor actions of like a handful of shitty male people in the sector, and Seeds has had to suffer for it. And I think there's a lesson in that, and it was part of the path and everything, and I accept it, but it's just really annoying. And it's also an old story that's happened in different forms and a variety of different sectors and for a lot of different projects, but I think that's going to change. Um, yeah. So, yeah, I think 2024 will be interesting, and heading into 2025 and 2026. As I understand, there's this idea that, right, I think the energies are going to be more supportive for us heading into those years. So it should be fun. Seeds needs to make adjustments for sure. We need more support. We need more product improvements that haven't happened and are long overdue, because I haven't been able to find the right support for those things, which is also interesting. I'm not sure why that's happening exactly. But yeah, it's all sort of coming together, I think. And I think we're going to see these shifts. Um, Willie says he got interviewed by 60 Minutes, Sam Bankman-Fried. Yeah, it was like a media circus. It was almost like Kardashian level. I mean, that's an exaggeration, but I've said this before in another live that I did. But I even saw this article that was talking about like what Sam Bankman-Fried had on his desk, like the type of like gum he had on his desk and like Adderall. It was just very much like it was so overcovered. And even publications like the New York Times were focusing on that solely. And it was really frustrating. It was like, I made a YouTube video complaining about it because there was an exclusive focus on the worst aspects of the sector. And it just seemed not objectively motivated, I guess. Herdrip says, would love to know if you're going to have a new course on this. Couldn't participate in the early one. Thank you for asking. Yes, I'd committed to doing them live once a year as of, I think, like 2021 or so. And so I think what we'll do this year is it probably makes sense. It's weird because I've found that it can help to time them with the markets. Like when we did the course last year, it was hard to get anyone to even pay attention because like there wasn't a focus on cryptocurrency in any sort of positive way, which is a shame because obviously, like in those moments when the markets are down, that's when it's going to be most advantageous for people to get involved, because then they're in when the market goes back up. But it's just the way things go. So I think what's going to make sense, her drips, is to probably time the course at roughly when the Bitcoin halvening is happening / the Jupiter Uranus conjunction in Taurus. So I think we'll probably close registration around April 20th. That's the current plan. If there's a lot going on this year, which it looks like there may be, I may do more courses live. We tried automating them a while ago, but I just didn't feel great about it. It didn't seem like it attracted the people that would resonate with Seeds. And the whole reason I do the course, not the entire reason, but the main reason is to support Seeds, because the course sustains Seeds so that 100% of the gifts that come through Seeds can help people in need. So while I like trading and like I'm interested in cryptocurrency generally, it's I don't want us to be attracting like your run of the mill crypto bro, because that is like not the energy that I personally want to deal with. And that's not the energy that's going to be supportive of Seeds. So yeah, I just felt like, what's up, Tin Top? Nice to see you. Yeah, so I just felt like automating the course tended to attract more of that energy, even though it could be a financial support for seeds. I wasn't sure that it was worth it. So I'm still interested, and I think it's best for everyone to do the courses live. So yeah, that's a long-winded way of saying I think we're going to close registration right around April 20th for the next live course. I appreciate you asking. Um, Readings by Jen says might be time to softball it as financial literacy. Yeah. There's like yeah, I've been thinking about different ways to position things, and it's tricky. And I appreciate that insight, because it's like, how do you get the spiritual people who know the system isn't working, who are frustrated with the system, but who hear the word cryptocurrency and they immediately are like, oh, that's the grossest, worst representation of late stage capitalism, right? So, like, I think I can hopefully do that more effectively in long form videos on YouTube. So I'm starting to experiment with that. But yeah, it's just because they're viewed to be very different, like ends of the spectrum almost. And I know that there are a lot of things in the past that like seemed very different, and when you brought them together in a certain way, then they were unique. And once people understood what it was, then it could really thrive. And I think that'll be a similar path for seeds. But just like right now, and in the last like 2 years, it's been annoying and weird and hard to figure out how to get that message across. But when cryptocurrency goes up, I think in some ways it's also easier. Yeah. Um, Willie says, are those bad actors having a negative effect on seeds? Totally. Yeah. I mean, the gifts that we had coming through our ecosystem decreased by a factor of almost 20x. Like, it was enormous. And there were other pieces of that, because like inflation went up a lot, people had less money. But absolutely, those like was like ruining those assholes for making things harder for our project. But like I said, I think it is just part of the path and part of the stage that we were in at that time. And I think it's going to change, because I think that energy is going to fall away, right? Like, I think the biggest idea maybe I want to impart today is that I think that sort of toxic, self-interested energy, it can't sustain through the energy shift that we're going through on Earth. But something like seeds that was designed with, this thing about uplifting us together through helping others and through giving, is meant to make it through this shift and to thrive in the new energies that are oncoming. So I totally have faith in that. I wouldn't have been doing this for as long as I have been if I didn't think that it was positioned to really help a large amount of us in the near future and beyond. So yeah, that's how I think about it. Um, all right. So I thought I'd also share, this is like sort of purely practical stuff. I'm really interested in the esoteric and the sort of meta level stuff. And I appreciate y'all like hearing me out on that. On a practical note, if you're a total beginner, there are a few things that I think it's a good idea to do now. In case you haven't heard me discuss this before, or you haven't come across these ideas before. But I'm going to say there are 4 things that beginners, I'd suggest taking care of, like ASAP, if you haven't done this already. Okay, the first is that you want to get what's called a self-custody wallet. It's a self-custody wallet if you have exclusive access to the private key or mnemonic device for that specific wallet. So this is an important distinction between the world of decentralization and centralization in finance. We're used to a bank having custody of our money. We give the bank our money. They, like, we can log on to whatever the dashboard for that particular account and we can see the money, but we're actually then asking the bank for permission to move that money. And banks sometimes still, even today, charge like ridiculous wire fees, which are exploitative. In the US, I think it actually costs the banks 70 cents or so on what's called the Fed wire system to send a wire. But some banks will still charge people like $35 for that, which should be illegal. And yeah, we're effectively asking them to move our money, and we're trusting them with the custody of our money. So even was it last year? I think it was last year. When, like, for example, Silicon Valley Bank failed, it was an instance of, oh, this bank has custody of our funds, banks employ something called fractional reserve banking practices, in which they only have a fraction of total reserves available for withdrawal at any given time. And the rest of that money, they're investing in something else, which is making them significantly more interest than they're paying us for using our money, right? Like that's how banks work. So that's works okay until a bank gets overextended in its investments, and then suddenly more customers want to withdraw their funds and the bank can't cover those withdrawals. That's how bank runs happen. That's what happened, at scale during the Great Depression, and it happened as recently as last year for Silicon Valley Bank. That's also, by the way, what happened essentially for FTX and for Celsius and those other centralized um, cryptocurrency platforms. Same deal. People put the custody of their funds in the trust of these centralized platforms. You didn't actually have access to your private key or your mnemonic. You didn't actually have control of your wallets. And then those people took our funds. I mean, I hope they didn't take the funds of anybody who's listening on this webcast today, because it was such a painful thing for a lot of people. But yeah, they took the funds and invested them somewhere else, and then the market turned, and then they couldn't cover customer withdrawals, and then everything crashed. So it's literally the same phenomenon with something like FTX and something like banks that failed in like It's a Wonderful Life, when Jimmy Stewart's like in danger of going under, is an example that I use a lot if you've ever seen that movie. Jimmy Stewart can like talk to his friends and convince them not to do a run on the building and loan, but these like corrupt corporate banks weren't able to do the same thing. So Willie says bank charged me $10 for, I can't see the check, I think it says to move some funds. Yeah, it's just like they just make up fees, and like overdraft fees I think are illegal as of very recently, thanks to the efforts of Elizabeth Warren. But yeah, it's really messed up. Unfortunately, Elizabeth Warren, I don't think has an understanding of the potential in cryptocurrency. She's just like trying to go after the bad actors, but that's another conversation. So that's the first thing. If you're a beginner, you want to set up a self-custody wallet, because then you have custody of your funds and you're protected from those types of issues that we can see at centralized institutions when they have custody of our funds. Again, it's self-custody if you have the key or the mnemonic for that wallet. The wallets that I use most often today are the Coinbase self-custody wallet, not to be confused with any wallets created on Coinbase's centralized exchange. So again, if you have the key. I also use the MetaMask Chrome plugin a lot. Neither are perfect. If you want to be more secure, a lot of people end up buying a hardware wallet like a Ledger and spending, it's probably like $200 or something now. Excuse me. I've never found that to be necessary. I've never used a hardware wallet. I'll keep wallets in what's called cold storage, which literally just means like not having them online, not having the private key online. But in my opinion, there are even better, more recent solutions. Like there's a wallet that used to be called Gnosis Safe. I think they're just calling it Safe now, SAFE. Gnosis was like GNOSIS. That's a multi-sig wallet. So you could set that up so that it requires approval from 2 wallets in order to move funds from that account. And that can increase the security of your wallet significantly. We had somebody in the Seeds community, unfortunately, get hacked in like January, and they like drained a bunch of cryptocurrency in their wallet, in their self-custody wallet, because the hacker got access to the private keys for that wallet. And it was sad, definitely sad for that person. And it was also sad for the Seeds pool, because the scammers sold seeds, which drained like resources from our mutual aid pool effectively. And if that person had been using a multi-sig wallet, which I mean, they didn't know to use this. That wasn't even something that I had taught in our course previously. It's just something I've recently started to talk more about, I guess, in like the last couple months. But yeah, that could have prevented that issue, because if even if a hacker gets access to one of your private keys, if you're using a multi-sig wallet, 2 keys are required from 2 different wallets. So that can prevent a theft like that from happening. So check out Gnosis Safe. I think that's probably going to be a better fit for most people than dropping $200 on a ledger. And ledgers can have other issues as well. I've known folks to get locked out of them and customer support, I think, is not necessarily always great. So, I mean, just as I've said in my experience, I've never found a hardware wallet like a ledger to be necessary. Okay, so again, that was the first thing, get a self-custody wallet. Oh, I should also say they're free. Like they're apps slash Chrome plugins and so forth. Like it's not something that you have to pay for, in case that wasn't evident to anybody. The second thing, which is super, super important, and I think it behooves you to define this for yourself, like earlier rather than later, is like rule of thumb generally when you're trading is you never want to invest an amount that is any more than you would be totally okay to lose. You never want to go all in with like, your life savings that if you lost some of that, would make it impossible to cover your basic expenses or something like that. Sometimes people confuse trading with gambling, and they're not at all the same thing. When you're trading successfully, based on my experience, like coming from being a professional stock trader and so forth, there's a sort of discipline that you want to bring to trading and a framework, and you want to go into it with a plan. You're going to help yourself out if you go into it with a plan. And the first sort of core tenet of that is looking at your finances and being really honest about like what amount truly is okay for you to put in, such that even if, it was wiped away tomorrow, it's not going to disrupt your daily life, even though, of course, that would be really shitty. And like, none of us want that to happen. Of course, we don't want to get ripped off like that, but you never want to over leverage in that way. So this could be like a lump sum. Maybe you have something in savings that you're comfortable allotting. Or if you look at like your monthly income or something, maybe you discover that you have a couple $100 extra a month or something like that you can allocate to putting into cryptocurrency investing. So it could be a different thing for different people, or maybe it's a combination of both of those things. But the core thing is just making sure you're really honest with yourself and you're not putting yourself in a position that could go horribly awry. we want to avoid that at all costs. Then a thing I suggest, something I talk about in our course actually, and I ask people to go through, is this idea of writing out your values and your overall financial goals. It's easy, especially, I mean, I don't know if TikTok's going to be like this cycle, because like when I talk about cryptocurrency on TikTok now, it gets like 300 views, and like a few years ago it was very different. But also like I'm older now, and I feel like there's ageism on TikTok that is a factor. But anyway, at least last cycle, like 2021-ish, you would see these people who appeared who had like crypto TikToks who were talking about different cryptocurrencies. And like if you're sort of following the market in that kind of casual way and you're just seeing a news report about a certain cryptocurrency or somebody talking about it on some platform, then you can have this stronger sense of FOMO, like fear of missing out, which can then make you think like, oh, like I'm going to miss the move. I better get into that cryptocurrency. And it may not be something that is actually a cryptocurrency that you're at root would want to be involved with. That's the other piece of this, like why it's helpful to write out your values and your financial goals. Because of course, if you just want to make money, if you're just interested in finding profits, that's totally okay. It's just, I think, important to articulate that to yourself, because if that's the case, then you can start looking for something that's going to pop, or maybe something that's going to go from decentralized exchanges to a launch on a centralized platform. Because a lot of times when we see that happening, then there's going to be a big surge in price as soon as it launches on that centralized platform. So, I mean, that's morally neutral. There's nothing to be ashamed of if you decide that you just want to make money using cryptocurrency tools and trading cryptocurrency. But it's a good idea to articulate those values first, because then you can start to know where to look in a proactive way instead of getting sucked into reactive sorts of trades that may be dominated by something you just heard about in the news or something you saw on somebody speaking about on YouTube or TikTok or whatever. So you can write that out. I've used myself as an example in this exercise in the past in terms of values, for example. I really, really want to get us out of this. Like, I'm like almost going to tear up talking about it. Like, I'm so convinced that late stage capitalism and its extractive design and the way it forces us to go to school for a bunch of years to like fit ourselves into a job defined by a corporation in many cases. I'm so sure that that is perhaps the largest thief of human potential at this stage. we shouldn't be having to fit ourselves into spaces that aren't actually a good fit for us, or really anything else than an ideal fit for us, simply because in this system we need money to survive. I want to get us out of that. So for that reason, like that's the reason seeds exist at root. But also, I'm very interested in ether, as many of you know. And I think it's because like the energy is better. The energy in Ethereum is more feminine, I think, in a lot of ways than it is across the crypto sector. Y'all, like, oh my gosh, like in 2017, I think. I was in San Francisco at that time. I was in San Francisco for a number of years because obviously that's where tech stuff is. And y'all, I remember I went to this, it was an Ethereum event, like Ethereum organized it, like their marketing branch or whatever. And it was about like consciousness or something. And like, um, how did they frame things? I'm remembering the energy of it as I'm describing it more so than I can like put that into words. My point is that I went to it and I was so inspired and so excited. Like I felt like, oh, I'm in San Francisco at this time going to this event. Like for a person who's alive at this time in history, this is like a, I'm very lucky to get to go to this. And that was something that was present in the Ethereum ecosystem that certainly hasn't been present in the world of Bitcoin or really any other cryptocurrency. I think Seeds has a different brand of that. And so I hate using the word brand, but you know what I mean? Yeah. So, I mean, Ether feels a lot better to me. And it's interesting in that it pioneered this idea of, for anyone who's not familiar, Bitcoin, you know, is like a decentralized ecosystem. And that's was a new thing and it's exciting. And Bitcoin's over 15 years old now. The founder of Ethereum, who is most credited with pioneering it, Vitalik Buterin, Ethereum has like 8 co-founders, though, I believe. So he wasn't as a software developer, and he wrote for something called Bitcoin Magazine. And as I understand, he was like, "Oh, Bitcoin's cool. It's great that we have this decentralized ecosystem, but wouldn't it be exciting if we built a decentralized ecosystem with the intention of making it easy to allow software developers like me to build other projects on top of it?" And that was novel, and it's not something, you know, that Bitcoin was designed to do, to make that a simple thing to do. So yeah, that's interesting to me. And so a lot of projects, as I'm sure y'all are aware, have been built on top of Ethereum since then. Ethereum launched in July of 2015. So, you know, just by virtue of that fact, because there's a thing like network effects, there's just a larger group of people who are invested in the success of Ethereum as a crypto network. So I'm a believer that something called the flippening will eventually happening, in which the market capitalization, sometimes this is defined in terms of price as well, that the market cap for, so like the total value of all Ethereum will overtake the total value of all Bitcoin. And I think that there could be a likelihood that Ether overtakes Bitcoin in price as well. So that's like kind of a side note. But yeah, the point is that I feel that Ethereum aligns with my values, and it's interesting to me. And so I've wanted to invest in it, and I have over the course of a bunch of years. Tintop says, I segregate my wallets, just generate new address to connect to new dApps. I don't want to get caught by a hack picking up pennies in front of freight trains because of some silly airdrop or exploit. Interesting. Good to know. I haven't explored that. I'll have to look at segregating wallets. Thank you for sharing that. I appreciate it. Yeah. Okay. So that was 3. Again, 1, get a self-custody wallet. 2, figure out how much it would be cool to lose, even though that's never cool, like worst case. 3, write out your values and your overall financial goals. Oh, I could finish that off if I'm using myself as an example. I could say, for example, that like in terms of financial goals, I really like Martha's Vineyard. I just feel peaceful there. I've only been there a few times, but I have this dream of like owning a house on Martha's Vineyard, and they're expensive. So that could be something though that I define for myself. Like that's the kind of thing you can put on a vision board, right? That you can use for manifestation, and it can make thinking about your cryptocurrency trades more tangible, and it can ground it a little bit more. And so I found that that can be helpful as well. And then the last beginner tip that I have is that, you know, if you're a beginner, I'm assuming that you're probably not going to be trading the markets very actively. Maybe that still seems like an overwhelming thing. But something simple you can do once you've defined your values and your goals that can guide you to the cryptocurrencies that resonate with you. And then you can set up something called dollar cost averaging, or like in an effort to not be so Amerocentric, fiat cost averaging. It essentially means that you can like set up a recurring buy on a centralized platform. Coinbase does this, Kraken does this. I don't think Gemini must do this, but I haven't seen it, at least on, maybe it's not showing on active trader. My point is that most centralized exchanges will make this possible. So that way, if you're setting that up, then you're just um, riding out the movements in the market, because you're just saying, like, I'm putting $50 in every day on the 15th of the month. And that can help you accrue cryptocurrency, obviously, through market cycles. And then, you're automatically buying when the market is down and so forth. Tintop says same seed phrase, just new address with each project. That's interesting. Okay, cool. Thank you. Thank you for sharing that. Okay. Tintop, if there's a specific tool that you use for that or that you prefer, like, please let us know. Um, I'm like thinking about other applications of that in other sectors. That's cool. I hadn't even heard that that was something that was possible now. So that's like exciting. That's super useful. Yeah, so you can set up DCA as a way to make sure you're getting involved in the sector without having to worry about actively trading. And if Seeds resonates with you, you can actually set up, we have weekly and annual as well as monthly recurring buys now. So you can set up a gift through Seeds. I shouldn't call it a buy because that creates confusion. You can set up a recurring gift through Seeds, and then that functions just like dollar cost averaging, because you get the value of the seeds, a value of seeds that is equal or greater than what you gave at market price at the time of your gift. And then on top of that, 100% of the value of your gift will go to helping someone in need. So that's the thing that's tricky about seeds. Like, nothing else is kind of straddling this, or I should use the word transcend, working to transcend the for-profit, nonprofit binary that only exists because self-interest is centered in late-stage capitalism, thanks to Adam Smith and what he wrote 240 some years ago, right? So it's time for that to change. But that's another thing that's been tricky with seeds, because people aren't used to this idea of building abundance yourself through helping others. They think it has to be this compartmentalized thing. But with recurring giving through seeds, it's like you're DCAing, but you're helping people in need at the same time. All right, y'all, I don't want to go super long, but I did want to also talk about staking. This is in my more advanced section. So if you're feeling like a bit of a more advanced trader, this is entirely like I could do many talks about staking in DeFi and different opportunities in DeFi and different L2s, layer 2 products built on top of Ethereum. And yeah, that's for another day. But just generally speaking, I think it's a more advanced, it falls in the more advanced category to say that when you have gotten some cryptocurrency and it's hanging out in your self-custody wallet, it's a little like hiding cash under the mattress if you don't then stake that cryptocurrency in what's called DeFi, decentralized finance. The reason for that is, first of all, when you stake, like, it's actually really exciting, I think, because unlike the banks, again, which have custody of our funds, if you're trading on a centralized exchange like the New York Stock Exchange or something, you're giving up custody of your funds. It's an entirely different design. There are, without like going too much into the history as I understand it, at root, like the value of like these rich white men who were behind the founding of something like the New York Stock Exchange is initially that you needed liquidity on those platforms so that people could trade without friction. So like, for example, if you're like the Winklevi, right? If you've seen The Social Network, the story of Facebook, and Armie Hammer plays the twins, right? So after they won $65 million when they sued Mark Zuckerberg and Facebook, the Winklevi put $11 million of those funds into buying Bitcoin in 2013, I think, ish. So they became billionaires because of that. And they founded Gemini the centralized cryptocurrency exchange, and it's called Gemini because they're twins, right? Okay, why was that relevant? That was relevant because with a centralized platform, and again, we know that those exist in cryptocurrency and outside of cryptocurrency, like you need a rich person or a group of rich people to put up the liquidity so that if somebody goes to the platform and they want to make a trade, then like there's enough Bitcoin there to buy and sell, right? So that was necessary because of the design of the old system. With the introduction of DeFi tools, Uniswap really pioneered this. Uniswap launched in November of 2018, I believe. Like, y'all, they figured out a way for us to do what's called staking so that any of us can put up the liquidity together in what's called a liquidity pool while retaining custody of our funds as we do this. The values in the wallet are going to change even as you have custody of your money because people are trading your liquidity and you're getting paid fees because you're allowing traders to use your liquidity to execute trades. So it's so much more democratic because we can just come together and be a part of these pools, and like self-interest and the interest of everyone in the pool aligns. So it's really fucking cool, I think. Like, and it took a while for somebody to figure that out. There were other decentralized platforms like Ether Delta was one prior to Uniswap's launch, but they didn't figure out this liquidity pool thing, and so that was continually a problem until Uniswap figured it out. And they figured it out through something called well, they have you stake in pairs. So, for example, if you staked in the seeds and Ether pool, you'd be staking both seeds and Ether, and Ether kind of acts as a mediating cryptocurrency on the platform because there are a lot of other pairs that are also staked with Ether. And therefore, the Ether can be traded for the other cryptocurrencies as a middle step, essentially. That's like the initial design that Uniswap offered. Anyway, the point is that if you have cryptocurrency just chilling in your self custody wallet, you might as well stake it so that you can earn those trading fees. You can also get staking bonuses. Seeds has offered staking bonuses for years. And then you can get surprise airdrops. Um, I know Willie was one. We were around like back when uni did this surprise airdrop. I think it was like September 2020. Y'all, like, we got a lot of money, like, which was great. And it really was totally a surprise simply because we'd staked on the platform. But I had a bunch of other cryptocurrency just sitting in a wallet for no real reason. I just hadn't staked it. And it's not an exaggeration to say that if I'd staked all the cryptocurrency I had, I would have gotten enough free money in that airdrop to buy like a nice house in the States. So don't be like me is the moral of the story. Like, there really nothing in cryptocurrency is without risk, but there really isn't a downside without going into things into like, I don't want to make things overly complex today, and I feel that I'm already kind of doing that, but um, there's something called impermanent loss. So you can be down a bit until the earned fees accumulate enough that you're up when you stake. They call that impermanent loss. But beyond that, if it's a good quality project and you're using a trustworthy platform like Uniswap, like there kind of isn't any reason, in my view, not to stake because there can be this enormous upside and these other benefits. I just got another airdrop in like it's March now. I think it was like early January. It was like a surprise $3,400. Again, just because I'd staked. So like those opportunities are there. They're not as plentiful as they were a few years ago, but they still exist. Okay, now I'm going to hop into taking a look at a chart so I can kind of show you how I think about trading on a centralized platform. And then I think I've kind of looked at the questions in the chat as we've gone through, so I don't know that we need like a Q&A section so much, but then I'll just like chat with y'all a little bit for the last few minutes. Okay, so this is, you can see the URL up there, exchange.gemini.com. This is Gemini Active Trader. I think that's what they're still calling it. And this is Bitcoin. So yeah, just as a quick overview of this, looking at this is like totally foreign. Let me make this smaller on my screen. So yeah, just to give you a brief, like, actually, let me make this a little bigger because it's not showing the order book on the right And I do want to introduce you to the concept of an order book, I think, if that's not something you're familiar with. Okay. But yeah, in a nutshell, we're looking at, you see it says BTC USD over here on the left. That means it's Bitcoin and the US dollar trading together. And so it's showing the price of Bitcoin in US dollars. So I lose my screen. Okay. Um, cool. You should be able to see the order book now, I think. Yeah. Okay. So if we're looking at this, and this is on a 15-minute like data interval, that's what this graph is showing here. So we can go here and choose different intervals if we want to look at longer term graphs. So this is the hour graph. See if my internet's going to give me trouble. I'm so sorry, y'all. I thought okay, good. The lag isn't super horrible, hopefully. Okay, so this is the hour graph. So this is a longer term graph. And we can also zoom out to take a look at the trend over an even longer period of time. Something that's kind of annoying about Gemini, and there are many, many things, and I only use them because I think they're the least worst centralized exchange, as some of y'all have heard me say before. Okay, so like they only show graph data back a year in time for some reason. So we can't look at a larger, we can't look at more data in graphical form on their platform for some reason. But if we check this out, okay, so like right here, that's today, about 7 a.m. Pacific time. It hit, it looks like 69, 210, 95. So right here, y'all, is when it hit all-time highs. So yeah. So there's that. To further kind of introduce how this platform works, I suppose we'll talk about the order book a little bit. And I should also make sure to state that this format is essentially, it's almost identical to what I was looking at every day when I was a professional stock trader. Platforms like Gemini literally just took the legacy economic system and these aspects of its design and like plopped it onto cryptocurrency. So there isn't a ton of innovation going on here, except for like the technical challenges of storing cryptocurrency and making it available for trade and so forth. But they're still necessary because most of us are going to, at some point, want to trade fiat currency like the US dollar for cryptocurrency. And you can do that on a centralized exchange. If you're using a decentralized platform like Uniswap, you're trading crypto for crypto. That said, you can also help people in need through seeds with fiat currency. You can just use a card, a debit or credit card if you want, and you'll receive seeds cryptocurrency in thanks. So that can be another way to use fiat to get into cryptocurrency without having to deal with a centralized exchange. So yeah, okay. So if we look at the order book over here, just in brief, it's already almost 10 till. So we can see here that we have ask in red and bids in green here. When people put in bids, they're wanting to buy the asset in question. So Bitcoin in this case, they're wanting to buy Bitcoin at that specific price and in this specific quantity. And then on the other side, on the ask side, they're wanting to sell at that specific price and in that specific quantity. What you're seeing in the order book, it's typically limit order in terms of order type. I think there's probably like, yeah, other more esoteric things like make or cancel, stop loss orders are another thing. I have only used limit and market orders, I think, ever, even when working as a professional trader. So, I mean, you can explore those other options if you want, but I haven't found them to be necessary. Yeah, but these are limit orders because when you're making a limit order, you can be precise about the price that you want. When you're making a market order, it's not going to let me see that. So there's a stop limit order, they're calling it. If you're making what's called a market order, let's see if I can find it in the drop down. Here we go. This is just going to hit the market. So whatever is being offered, if I were selling and I wanted to get a market, if I wanted to make a market order and sell, it would just hit the bid. It would get me the price offered right here inside the market, like the highest price that someone was willing to buy at. And the thing about market orders is that they're executed quickly. Typically, they'll just hit the market. So if things are going crazy, like they're really going up a lot or down a lot, then you're probably going to want to use a market order because there's a greater likelihood that you're going to actually have your order executed. Whereas with a limit order, as I said, you can be more precise about the price. But as you can see here, like for example, there's a limit order in here. I'm assuming it's a limit order for like 62,045 or something. It's changing quickly. But that might not get filled if the market goes back up. That order could just be hanging out there if the market doesn't reach that price. So you want to use limit orders whenever you're able to be more patient and when you're looking at the graph to find sort of like specific levels at which to buy or sell. I think there were questions. Yeah, I'll hop in here and back into the chat a little bit and see what folks have said. Chintop says, I employ a spreadsheet to keep each address organized from the start. They're P&L calculators. Interesting. But how are you generating new wallets for the seed phrase? I remember using, I don't remember what it was called, but I know in like my Ether wallet back in the day, we had a wallet with a single seed phrase, which generated a million different addresses. So I guess I'm assuming that's the tool that you're using or something similar. I don't know what that's called though. So if there's like a name for that, let me know. Jen says, I'm just buying and holding DC at $100 a week. Good job. Good for you. Various altcoins, not trading. Can you talk about taking profits in a time like this? I'm more inclined to just keep holding. Yeah, good question, Jen. So, what's the best way to frame this, I guess? If we look at the graph again here, okay, so like in terms of taking profits, if that phrase isn't familiar to folks, it just means selling basically when things have gone up a lot to take your profits and lock them in. Because another important fundamental thing to understand is that as much as you're up or down, you haven't locked in that profit or that loss until you've bought or sold. It's just a number on the screen reflecting the value of the Bitcoin that you own until you sell that Bitcoin for fiat currency like the US dollar, right? So keep that in mind. You're not truly up or down that much until you've closed out the position and bought or sold to get back into fiat currency. So what some folks want to do naturally, which makes a lot of sense, is that they want to take profits when the market's going up. And then sometimes people will want to buy back in, for example, something like Bitcoin, when it comes back down. So yeah, Jen, I mean, if you're, this may be, I think this is needless to say for you, Jen, but speaking generally for anyone who may be less familiar, if you're doing something like DCA, you're probably not necessarily taking profits or looking at a strategy that includes taking profits very often. But it's a big deal when Bitcoin hits all-time highs, right? For what it's worth, this is my view. Looking at this graph, right? Okay, so like we hit all-time highs this morning. The reason it's down this much, you see these red candles, people call them candles. These are people selling, and we see that, there's more red than green, and the prices come back down. Now we're trading at about 61,827, even though we broke 69,000 hours ago, right? This happened because people took profits, right? So that's why, it was unclear whether or not we were actually going to hit all-time highs so soon, because people might have wanted to take profits just below all-time highs. But it turns out they waited, and then people took profits once we broke through all-time highs. So that's when you have opportunities like this, which are rare. Again, this is the first time in 15 years of its existence that Bitcoin has broken $69,000 a coin. Today's a big day. So on days like that, when there's an opportunity like that, yeah, you might want to take profits. And you're probably going to watch it to see like, okay, does it look like it has the momentum to break all-time highs? If it doesn't, then you're probably going to want to take profits just below where all-time highs are trading at. And that actually happened last night. I went live on TikTok for a little bit, just like watching the markets to see if Bitcoin would break all-time highs. And it was just chilling. Like, let's see here. This is yesterday. Yeah. And it was like in the evening that I was live. So I think it was hanging out around here, which was like 68.7-ish. So it was very close to all-time highs, a couple $100 below all-time highs. And it just chilled there. And it was kind of interesting because like it was boring. Like nothing was really happening because people didn't want to take profits because they wanted to see if it could reach all-time highs. If there's larger skepticism about the momentum being present to make it through all-time highs, people will take profits sooner, right? So yeah, it wasn't really doing anything. So then eventually people just started taking profits, and that's what happened here, and that's what drove it back down. And it looks like it got down to 65 or so. And then this morning it was able to come back up and break through. So yeah, if you're trading this more, if you're able to stare at the markets for hours a day, which most of us I know aren't, then yeah, you could look at that. You could watch it as it's approaching all-time highs. You could determine whether it looks like it has the momentum to break through or not. Take profits, just before the all-time highs if the momentum isn't there, like folks did last night. And then you could look at it and see like, okay, it looks like 65,000. This is a little bit of what's called technical analysis, looking at different price levels. But if you look at this graph, we can see that 65,000 was something of a level of significance in the past, because we can see here that it looks like it held at around 65,000 for a bit of time. This is a shorter term graph. But yeah, here we can see there was something of what would be called a price floor at 65,000. And it hung out there for a little while before it went back up. And even when it dropped back down here, like late-ish last night, it just barely came back down and touched 65,000. So 65,000 looks like kind of a significant level, at least in the shorter term graph. Now it's like plunged below that. So now it's like, okay, maybe 60,000 is the next significant level. So yeah, I mean, looking at this, also because this happened quickly, this drop just literally happened as I was talking. This makes me think like, okay, I would like to scoop this around 60,000, because 60,000 is probably a significant psychological level because it's a round number, and a round number with like more zeros after the first digit. So if I could scoop it down here, that might be good, because it drops so quickly. It might rebound quickly as well, but you also don't want to do what's called, like people will use the phrase like catch a falling knife. Like when it drops like that, it can cut you. So you might want to chill a little bit to see if it can stabilize around 60 and to see if it looks like the momentum is going to reverse before buying back in. This is moving kind of quick, so let's see. It might drop below 60. But yeah, Jen, I hope that kind of references what you're asking. So you can use momentous days like today where all-time highs were broken to play off the highs. And you can do that in a more relative sense too, if it's just like the high for the day or something like that. And then look to scoop it whenever it comes back down, if you can catch a level that looks like it has some support. So it broke through 65. 65 no longer had that support. Maybe 60 looks like it could be a new support level that could be a good place to scoop if you're trading more actively. If you're just taking profits, if you're just selling though, yeah, you want to try to look at the all-time highs if you have that opportunity, and then see if it has the momentum to break through. If it has the momentum to break through, try to stair step it. So, I mean, I need to cut this off pretty soon, I think, because I didn't want to take much over an hour. Um, but in my view, because we've already broken all-time highs now, like I said, it's 43 days until the Bitcoin halving. This is really early. It seems to be powered by the fact that we now have Bitcoin ETFs that were introduced in states on January 11th. I think it's probably going to go up a fuck ton more, is what I'm trying to say. So I would, in my view, I would just be trying to buy the dips, because I think that if I'm using a strategy where I'm taking profits, I'm probably going to want to do that in like, I don't even know, like 6 to 8 months after the halvening, like looking at late 2024, because I would anticipate that it's going to break through all-time highs probably multiple times, because that's what it's done every past cycle following the halvening before it decides, like this is it, and it goes back into hibernation for a couple years. So I guess I would say, I mean, everyone has a different risk tolerance, but in moments like this where it seems like it's really just starting and it looks even stronger than it's ever looked before in the context of the market cycle in relation to like the date of the happening, probably buy the dips is what I would say. And if you don't like trading Bitcoin again, like it's influencing every cryptocurrency in the sector. Like I would use this to trade Ether, and just to look at Ether really quickly. Like we can see like Ether, look how closely that just followed the Bitcoin graph. This is the Ether graph. And it's like moving in what looks to be a super similar way, right? So we can use the movement in Bitcoin to inform us about what might be going on in other cryptocurrencies. So yeah, that's worth noting too. But yeah, it's 11:59 my time. So Josh Gu is here. Hi, Josh. Nice to see you. Do I have 100% of my crypto staked? Um, I think I have like a couple $100 on like a centralized exchange that's just chilling there. And I have like other wallets with like a couple dollars in them that were just like, it was too small of an amount to pay the gas fees to stake. But yeah, overall, I do have everything, everything I have staked. Yeah. Brian says I put $15 in staked. It's a 25.45 already. That's great. Cool, Brian. Tin Top says I can get you a link. The one I use isn't free, but from ATX Crypto. Interesting. Thanks. I appreciate that. All right, y'all. I wanted to show you one more screen, which is to say, if any of this was helpful to you and if seeds resonates with you, I want to invite you to consider helping someone in need through seeds. I know many of y'all in this chat like already do, and it's really, really appreciated. 100% of the value of your gift will go to helping someone in need, and you'll get 100% or more of the value of your gift in seeds cryptocurrency. And it's really appreciated. It's seedsgives.com. And yeah, there's nothing like this to my knowledge. And yeah, like I said, I think it is on trend with where the energies are headed. And I'm biased, but it's what I believe. So if that resonates with you too, I hope that you'll become a giver in the seeds community. All right, y'all, it's 12:01. I'll let y'all go. Let's see here really quickly. Jen says that helps. Okay, great. Tin Top says same way. Yeah, right. Okay, cool. I don't. Tin Top, if you know of a name for that, I can't recall it being called anything. Like, I wonder if they just never labeled it as something specific. Um, the Block Noob says, "How do you know what crypto to stake?" Yeah, good question. I won't jump in there right now because of time, but for example, Block Noob, like you can go to Uniswap's like data page. I can't remember what they call it, but you can see every pool that exist on Uniswap, and they're ranked in terms of the amount of liquidity in the pool, so the total value staked in that pool, and it'll also show you like the amount that pool has generated in fees in the last 24 hours or 7 days. So you can use that to see like if there's trade volume, that means more is being generated in fees. So that can be a good idea if you're trading, like if you're deciding to stake in a big liquidity pool, like for example, the WETH wrapped Ether Bitcoin pool, WBTC, WETH, wrapped Bitcoin, wrapped Ether. I don't need to talk about why it's that right now. But yeah, so you can see that ranking, and that can give you a sense of where you might earn the most in fees. But then there are other considerations, like if you're going to get a staking bonus. Some projects have generous staking bonuses. Seeds has a really generous one, I think. So yeah, there's that. And then airdrops are often a surprise. So like you can kind of anticipate them, but you might not necessarily know when they're going to happen. In recent years, when I've gotten free money through airdrops, it's just been because I staked generally, not because I staked in a specific pool necessarily. So yeah, just staking generally, I would say still kind of opens you up to some of those opportunities. But yeah, you can look at that list on Uniswap to get a sense of how things are performing if you want to use that strategy. Tintop says, have you explored using LP positions to dollar cost average in or out from token pairs while earning fees? Let me make sure I understand what you're asking. Using LP positions to dollar cost average. So do you mean like choosing to stake a certain amount in dollars, $200 in a pair at certain intervals? Because if so, I haven't. And I have wished that I think Uniswap version 4 is going to make dollar cost averaging or something like dollar cost averaging possible in terms of trading. I don't know if it's going to do that for staking though. So no, Tintop, I haven't, but that's a fun idea. But I think for what it's worth, as far as I understand, we'd probably have to do it manually still. I'm at least not aware of any tools that are facilitating that yet. Yeah. Herdrip says, thank you for the session. Thank you, Herdrips. I appreciate you. All right, y'all. I'll let y'all go unless there's something else you wanted to talk about. But I think that's it. Cool. This was fun. I really appreciate you. Okay. I'll talk to you later. And I hope you have fun this cryptocurrency cycle because they are really fun. I think they're really fun. When things are moving, it's fun. And it's fun to be like trading with your friends. So I should say too, if you aren't already in our Discord and you want to hang out there, that's a place where you can like chat about what's going on. And I check it every day of the work week. And yeah, it's just fun to talk to friends who are also trading. So that can be a place to do it if you are interested in joining the Discord. Okay, thank you so much. I'll catch y'all later. Bye. I don't know how much of a lag there is right now.